Today's financial market update. The most important market insights you need to know. Market sentiment is bullish, mild. Market is performing well across major indices. Index performance, S&P 500 at plus 0.86%, Dow Jones at plus 0.56%, NASDAQ at plus 1.34%, REL 2000 at 0.07%. The stock market sentiment remains bullish despite recession fears and geopolitical tensions affecting overall stability. A bullish sentiment indicates that investors are still optimistic about market recovery despite external economic pressures and uncertainties. Focus on technology and infrastructure sectors for investment, as they are currently attracting strong interest and could yield substantial returns. Oil prices have surged above $110 per barrel, significantly influencing inflation rates and consumer sentiment. Rising oil prices typically lead to higher transportation and production costs, which can dampen consumer spending and economic growth. Consider diversifying into energy stocks, as they may benefit from rising oil prices despite broader market uncertainties. Realty Income reported an EPS of 1.8 cents on $1 billion revenue, meeting analyst expectations. The mixed results indicate that while some companies are performing well, overall market sentiment remains cautious due to growth challenges. Consider investing in undervalued stocks like Enovis, ENOV, which may present opportunities as the market adjusts to earnings news. Consumer confidence is declining as recession fears grow, with sentiment indicators reflecting a notable drop in optimism. The decline in consumer confidence indicates a potential slowdown in economic activity, which could lead to decreased corporate earnings. Consider reallocating portfolios towards defensive stocks that tend to perform well during economic downturns, such as consumer staples and utilities. The effective federal funds rate peaked at 4.33% from May to August 2025, reflecting a tight monetary stance. The decline in the federal funds rate signals to investors that the Fed is prioritizing economic growth over inflation control. Consider increasing allocations in growth-oriented equities, particularly in sectors that benefit from lower borrowing costs, such as technology and consumer discretionary. U.S. GDP predictions indicate a heightened probability of recession, with markets pricing in a downturn. The prediction of a recession suggests that investors should brace for potential market downturns and increased volatility in equities. Consider diversifying portfolios to include defensive stocks that typically perform well during economic downturns, such as utilities and consumer staples. Oil prices have surged to over $110 per barrel, driven by escalating tensions from the Iran conflict. Rising oil prices typically signal potential inflation and increased production costs, which could impact corporate profit margins across multiple sectors. Consider investing in energy stocks, as rising oil prices may translate to higher revenues for oil companies during this volatile period. The U.S. economy is showing rising recession fears, leading to increased volatility in the currency market. Rising recession fears signal potential economic slowdown, which could weaken the US dollar and impact global currency stability. Consider diversifying into currencies of oil exporting nations, as their values may appreciate with rising oil prices. Tensions between the US and Iran are escalating, with potential disruptions in the Strait of Hormuz affecting 20% of global oil supply. Investors should recognize that rising tensions in the Middle East could lead to increased oil prices, directly affecting energy sector investments. Consider diversifying into energy commodities or ETFs that focus on oil and gas to hedge against potential supply disruptions. Oil prices have surged past $100 per barrel due to escalating tensions surrounding the Iran conflict. The surge in oil prices signals heightened geopolitical risks, prompting investors to reassess their portfolios and risk exposure. Consider diversifying into energy stocks or ETFs that could benefit from rising oil prices and increased demand. Rising oil prices have pushed Brent crude close to $100 per barrel, affecting global energy costs. The surge in oil prices is likely to lead to higher inflation rates, which may squeeze consumer spending in China. Consider investing in energy stocks that could benefit from rising oil prices while diversifying to mitigate risk. Oil prices have surged past $110 per barrel, significantly impacting market dynamics and investor confidence. Rising oil prices typically lead to higher inflation, which can erode bond yields and dampen fixed income returns for investors. Consider diversifying your portfolio with high-quality government bonds to hedge against rising oil prices and economic uncertainty. UBS has raised the price target for Essential Properties Realty Trust (EPRT) to $40, indicating a potential 17.9% upside. The upgrades from UBS highlight investor confidence in specific REITs, suggesting a favorable outlook in an uncertain market environment. Consider investing in Essential Properties Realty Trust (EPRT) to take advantage of the projected upside and attractive dividend yield. Oil prices have surged above $110 per barrel, reflecting heightened geopolitical tensions and supply constraints in the market. Rising oil prices generally lead to higher operational costs for companies, which can decrease profit margins and dampen investment prospects. Consider diversifying investments into energy-related sectors, as they may present opportunities amid rising oil prices and demand. AMD shares increased by 2.7%, following the expansion of its Ryzen AI embedded P100 series processors for edge AI applications. AMD's stock rise signals strong investor confidence in its AI technology advancements, suggesting future growth potential within the semiconductor sector. Consider adding AMD to your portfolio, as its AI technology expansion suggests a promising trajectory for growth in the semiconductor industry. Oil prices have surged to over $110 per barrel, driven by ongoing geopolitical tensions in key oil-producing regions. The correlation between rising oil prices and Bitcoin suggests that investors should be wary of increased market volatility in the coming weeks. Consider diversifying your portfolio by including energy stocks, which could benefit from rising oil prices, while reducing exposure to tech and crypto assets. Oil prices have surged over $110 per barrel, mainly due to escalating geopolitical tensions in the Middle East. The surge in oil prices could lead to increased operational costs for companies, potentially resulting in lower earnings and stock performance. Consider diversifying into renewable energy stocks that may benefit from increased government support as traditional energy prices rise. Thank you for watching. FERPA, your financial Sherpa.